Hello everyone, this is Gilbert Jalad. Again, we are back at 2022 with Tufts on Tax, where all your tax questions and answers are here with Mr. T. Scott Tufts, who is the master and the expert for taxes, and he will answer all your questions. He will bring up all the question marks that and the flags that are out there for taxes, and he will help you out. He is here to help you in any tax matter or lawsuits. So you can call him at 877-647-7887. Again, 877-647-7887, or you can email him at stufts@cplspa.com. Of course, this information will be in the bottom of the screen on YouTube, but if you're listening on the podcast, it's stufts@cplspa.com. And we are back with the first episode, new season 3 for Tufts on Tax. How are you, Scott?
Good to be with you.
Good to be with you too. And this year we have, this season in particular, we have new things we're gonna present. We're gonna bring up new not I would say fun, but also new things and subjects and ways of discussing taxes.
Yeah, I would say that we're looking at bringing our audience the information they need that will help them see how taxes can kind of get them, if they're not careful, into problems or issues that they may not realize. And so hopefully this can help them prevent some of these things. And then God forbid, if it happens, then they can come in and we can address their problems as well.
Absolutely. And today, and now we're going to start with introducing our new season, if we can say that to our audience, sure, and what they would be expecting for 2022 of Tufts on Tax.
So we'll kind of continue to let them know what forms and data gathering the IRS is doing, like we did last season. Mm-hmm. We'll talk about how that data gathering is going to affect them. There's a lot happening in the way that the IRS is gathering data for things like Zelle and other transfer agents that are going to be reporting amounts of a certain amount, perhaps in disclosing things greater than $600 or whatever it might be. There's the kind of constant concern about Bitcoin and other such virtual currencies. How is that going to be addressed with the tax laws? I think there's some maybe ignorance out there, and so that's a new area developing. We have many other forms of taxes and things that can come up, and we certainly want to bring that to our audience. And then secondly, we're going to maybe bring in some folks, talk to them, and bring awareness of these tax issues to them. So looking forward to this season.
Absolutely, me too, and I'm sure our audience as well. Now let's start now, since we are in February. Mm-hmm. And this is the beginning of 2022, and we're getting into the tax season now, yep. Which we are in it actually, and a lot of tax returns. And let's talk about that. What's going on?
Yeah,
with
so
that
let me say something that you don't hear very often. That's interesting. So your CPA or accountant or tax return preparers, this is a time of year they're very busy. So getting into them early and not waiting to the last minute is important. Gather your stuff now. Don't wait. If you're missing information, go get it now. Don't wait. And get to your accountants early, because they're going to feel more and more pressure as you get closer to the due date. And so just as a kind of courtesy, get after it now. Gather all your documents that you're getting in the mail or whatnot, your 1099 W-2s or other such things, and gather that information up and get that to your accountant now to give them the maximum amount of time to sit down with you or discuss with you your return. Because like we've been pointing out last season and before, especially as the more complex your life gets, there tend to be tax forms that ask a lot of questions. And what we're going to really do this season that, maybe will help is show you that you really have the onus is on you to read your return, read what you're signing, and know what questions they're asking and make sure they're answered correctly. You cannot bury your head in the sand.
Absolutely. Absolutely. Good advice. Now, we were talking about earlier, we were chit-chatting, and I was telling you about tax returns and how This season, I felt like me and my wife, we were doing our tax returns, and we felt like, okay, now people were talking about all this money that we're getting from the government and how we're going to pay it back, and are we paying it back through our taxes? How is that going? And we felt like our tax returns are less, even though we don't claim anything when we file our taxes. We put 0, both of us, but we still felt like this year was the lowest of all the years that we filed our taxes.
Yeah, so a lot of things are happening that when I hear folks say I claim 0 or I claim 1 with their employer to take out the most optimal amount of withholding to maximize their refund so that they get that refund every year, it's getting a little bit more complicated because you know, do you peg it at a little bit of a refund, right? Like, can you toggle the amount so that when you come to year end, it's perfect, right? Like you pay 0, you owe nothing, and you get nothing. Well, no, so folks might want a little cushion, or they just might like the idea that, hey, I don't want to worry about it. Just take the full amount, and then I'll get it back later, which seems to be the approach you and your wife took. So the problem is that when you say I claim 0 or 1, we're talking about you employees out there, W-2, who fill out a W-4. And that old system changed in 2020, and we'll talk about that, how the W-4 changed. And what the goal of the W-4 is for you to have a mechanism to toggle the right amount or the preferred amount that you want withheld over the course of the year for that to end up where you want it to. But that's going to take effort on your part. It's not like your employer just, you know, like you said, like I claim 0. Yes, that concept is still there. But because the form is a 5-step process now, different than it used to be, you have to kind of understand a little bit to get through that, and we'll do that. So let's kind of talk about the W-4 as it's changed and why it changed, and then let's get quickly into what the steps are.
Okay. So
the form changed in 2020. Now you may ask, well, why did it change? And so it changed with the change in 2017-18 with the tax law changes that we talked last season. Well, it also affected this. And why did it affect this? Because you remember you used to be able to claim personal exemptions.
Correct.
And your standard deduction on your tax form, or you itemized. Well, with the changes in the tax law from a number of years ago, they took away the personal exemptions. They increased the amount of standard deduction to take the place of the personal exemption. And so you have a changing way that they approach taxes. And then they played with you getting less opportunity because of that standard deduction. Less people itemize. So therefore, it really comes down to how your life has either no income other than that W-2 money coming in. But what about other income coming in that isn't really employer based? You got a side income, you got you got investments, you've got crypto, you've got other income coming in. When you add more income to the mix, then your amount you withhold you may come up short, correct?
Yeah.
All right. So the concept is what the IRS is trying to do with this change in the W-4 is improve in a very short way, in 5 steps, what can help you get a more accurate amount of withholding on your paycheck every week, or whatever the pay method is, monthly or whatever it might be.
Yeah.
Okay. So the W-4 has changed. So one thing our audience needs to know is, it's not so much the old way of 0 or 1, right, or a couple withholdings. There's a change. So first thing goes off your head. Okay, they've changed it. Other thing is if you have changes in life, like another child or a change of jobs or whatever, that's the time to revisit your W-4. So during the year, you shouldn't just go, I did at the beginning of the year, I'm good. It should be that if you have a major life change, you go ahead and pull that W-4 and give it to either the same employer or a new employer because you've revisited it based on these new events. Does that make sense?
Yeah, it does make sense.
So,
anything on W-4 form that any mistake on it or anything that you could not handle properly, would that lead to a lawsuit, or
No,
they
no.
need your help into intervening to
No, so
for employer? Or
no, because the employer can only rely on what you tell them. So if you
Okay.
make a mistake, they're going to either see the mistake up front,
Mhm.
or they'll go ahead and proceed each time you get paid.
Okay.
And the onus is on you to forecast the rest of the year and decide, am I going to end up where I want to be? I don't know of the situation where the employer, now, of course, if the employer is making a mistake, you should analyze that mistake, because let's say you fill out the W-4 properly and the employer doesn't do something right and you end up short that way.
Yeah.
Yeah, that might be a situation where
You have to.
yeah, I would take a look at that. You know?
Okay, I see.
But you should keep a copy of the W-4. I think a lot of situations they just grab it, hand it to the HR people, and they don't
Correct.
keep a copy.
To
I think-
remember what they did.
Absolutely.
They
And then I
filled
think you should have a little file at home and part of your taxes and say, here's my W-4.
out. I see.
And you do this with all your employers, because you might have more than one employer. So you should have more than one W-4, correct?
Yes.
All right. So when we look at the form, Gilbert, we're looking at, well, what are they asking for, right? Every time last season we talk about a form, we kind of want everyone to have the big picture, right? I'm not going to go line by line per se,
course.
but looking at the W-4 for 2022, it's going to get your taxpayer status right up front. It's going to ask you, are you single or married filing separately? Are you going to instead file married filing jointly, or qualifying widow or widower? And then you have head of household. Each one will have a different tax rate under the tax tables. Now, the next 5-step process. So step 1, everybody has to fill in the information. And step 5 would be sign it. So if you do nothing else but fill in step 1 and give them your status and do step 5 and sign it, you'll get the maximum withholding that we talk about, okay? But step 2 says, hey, what happens if you have multiple jobs, or your spouse works, or you have income on the side, more than one job? Then this gives you a chance to toggle and adjust the amount, okay? And we'll talk about there's an estimator that you can actually run through that's available on the irs.gov site to see how your estimate is going to work, okay? Now, your step 3 is your dependents. So like, we talked about before, if you've got a total income of $200,000 or less, or $400,000 if you're married filing joint, they're going to want to know, and you get to list the number of dependents and or other dependents of who you support, and you multiply them by certain numbers, either 2,000 or 500, and that amount's going to go into this calculation where you would adjust the amount of withholding off your paycheck, okay? You have a chance in step 4 to look at other income. Now, what this could include your retirement income or dividends or interest, passive income, and you can factor that in. So what you're doing there, Gilbert, is if you have withholding on your W-2, but you have other sorts of income where there's no withholding, you can kind of use this form to add that into the mix that can then help you raise the amount of withholding off of what you're making on the W-2 side.
Oh, I see.
Now, the same thing can happen the other way. Let's say you would normally withhold X, but you expect to itemize because you have itemized deductions greater than the standard deduction amount. More than 12,000, or whatever the number is, 14,000. Then you would say, hey, I'm going to have a lot of deductions this year. All right. If your mortgage interest is so high, you've got medicals, a lot of medicals. So the idea there is that you can then reduce the amount of withholding because you have that expectation of those additional deductions. So you can lower it or raise it based on these other items, these other things. That's step 3 and 4 of the process, okay? And then step 5 is sign it and you give it to your employer. And like I said, the main thing is revisit it during the year if you have a major event, that especially if it changes one of these categories.
And to go back and and when you say toggle, what do you mean by that? To adjust, to look at?
Yeah. So
how much do you expect?
Exactly. So doing nothing, and you kind of go to the zero part. They do a maximum amount of withholding, but even there, that's based on your income that you're making. If you have other income, that is not subjected to withholding of tax, then you could come up short, correct?
True.
So you can use your W-2 money to withhold more than what you might otherwise withhold to offset that anticipated income that you're going to have from other sources.
Interesting that you can do that.
Oh, yeah. So toggling would be toggling up to add because you expect more income.
Correct.
And then the reverse, like I said, toggle down or reduce the amount of income, withholding, because you're expecting a greater amount of deductions. This is prepared on the basis of your standard deduction and the rate tables. So in other words, if you only were single and you had nothing, just a very basic situation, and the only income you make is your W-2, so you're filling in part 1 and 5 and you just sign in,
That's it, yes.
then you're going to have that situation where it's pretty clean, what you're looking at, right? But if you start throwing in other incomes and other things, then you have a different situation.
It gets messy.
Yes. Well, taxes are messy.
They are.
Would you consider them messy?
I do.
Okay. And would you say that, do you find the topic to be one where you gloss over?
Oh, no. You have to really, think about it, and you have to read and make sure that
but
check
people
everything.
might bury their head in the sand and shut off because they just don't grasp it, or
they're afraid, or they're not comfortable.
So the goal is to work against that and try and be proactive. I think
exactly.
We talked about an example before that we went on the air that if you have a sense that you can sit on something and not do something tax-wise. A great example is if you didn't get a 1099 in miscellaneous or NEC, and yet you knew you received the income,
you have to
report it, even though you didn't get that form telling you have to, or the amount that you got.
Absolutely.
We talked about that. If you have income of any kind, legal or illegal, you're supposed to report it.
Yeah, about that illegal. We were discussing that earlier while we're preparing for the episode, and people that make illegal income, like making drugs or anything else illegal, they report it. And
so there's a special way to do that because the apprehension would be obvious. I don't want to report illegal income because it's illegal, right? But it actually works in reverse. There's an actual careful way that you can prepare your tax return to report illegal income, but not disclose the source, okay? And then that return is between you and the IRS. It doesn't go anywhere. It cannot be used against you if it's filled out properly. So there are accountants out there who know how to do, it's kind of what we call Fifth Amendment returns. And you don't, it's not done in a way it says, hey, I'm doing a Fifth Amendment return. It's just that the accountants out there, and folks, if you're not using an accountant, as complex as the tax system is, please use trained folks at this, because if you get in a situation where you have some income, gambling, other income that maybe it's not, quote, illegal as the way you think of it or whatever it might be, the goal is to get that on your return and not conceal it, okay? Right? Or not disclose it.
It's safer to do it that
way. 100%, because then your return, and then we were talking about one last example, we talked about virtual currency. You can't get in a situation where you don't report the virtual currency and the IRS looking at the hard forks in the road. From last season, you remember we talked about if you go from one account to another, that can be a gain transaction that you have to report. You might be like, well, they didn't report it. It's anonymous. They don't know. It should be the reverse thinking. I'm going to report it because you never know when that tax return is going to come up in some other context, borrowing, whatever, through a lender, and they're going to look at it and you check the no box and they say, oh, that's a false return. We can't loan you money.
Exactly.
Whereas if you had kind of gone the other way with your attitude and reported it,
you'll be safe. You don't have to get in trouble.
You can rest. You can sleep easier, right?
Yeah.
Or sort of, right?
Kind of, in a way. So, yeah, it's always good to, even if you are doing illegal things, which is crazy for me, that you still have to report it, and you're safe. And you're safer than...
You don't want the return to be the issue.
Yeah.
So the ironic thing about that is if you, under penalties of perjury, report all income, whatever sources, and you think that through and you say, and it's confidential and it's illegal to produce your tax return without kind of walking through steps or proper situations. You can.
So they won't worry about you doing illegal things. They would worry about that you're claiming and reporting the income, and that's all they care about.
All the Treasury part of the government's going to do. Now, look, folks will be out there saying, "No, I don't trust it. I can't. I'm not going down that road." Mm-hmm. But we're just pointing out on this part that there is a method to, and you should, in compliance, report it. And that struck you as odd, right?
Like, whoa. But we are not encouraging to do illegal things. Do not do illegal things, report or not. Don't. Anyway, well, that brings us to the end of our episode. And of course, we have more episodes to come this season. And we'll discuss all the things that you mentioned earlier.
Yeah, look forward to it. Look forward to this season.
Absolutely. Again, folks, you can always tune in on Apple Podcast or Google or Spotify, or you can go on our channel at CPLSPA with Tufts on Tax. You can call us at 877-647-7887, or you can email Mr. T. Scott Tufts at stufts@cplspa.com. That's STUFTS at cplspa.com. Thank you and have a wonderful day.